welcome to TheoTrade. This is Don Kaufman. April 20th, 2022, 30 minutes after the cash close here on this Wednesday afternoon. Tesla rocks, but the Nasdaq drops. Let's actually start right there with some of the price action from what we saw in today's trading session. So Nasdaq took quite the hit, down just over 1%. But I have to tell you, there's just what I would term conflict all over this screen. And by conflict, I simply mean, all right, so our conglomerate symbol, the monsters of tech, that's Apple plus Amazon plus Facebook plus Google plus Microsoft. No, we're not including Tesla and Nvidia because they're too volatile at this point. Nevertheless, these monsters of tech took a pretty considerable hit. I mean, all right, Microsoft actually finished largely kind of unchanged in the day. Apple literally unchanged in the day, but Amazon's down 2.6%. Facebook just got hammered, right? 7-8%. By the way, Facebook, that's worth looking right now on a year-to-date basis, down 40%. Google down 1.5%. All right, we're going to look at Tesla in just a moment as its earnings are out, and Nvidia down over 3%. Of course, I did not state the obvious, which is Netflix. And Netflix is probably in large part responsible for some of the hit, if you will, that the monsters of tech have taken. I mean, who's not looking at Netflix today and thinking that has got to hurt? Down some 35%. And it is, at this point, what I would term a fairly statistically significant move inside of Netflix. By the way, to kind of quantify that, I'll spend a moment just glancing over here at Netflix. And by the way, when it comes down to Netflix, I'm actually looking at, if you will, yesterday's trading session. The point that I want to make when I say, like, oh, it's statistically significant, you're like, man, it's a 122-point move. What else would you possibly want? Look. The expected move, right? The expected move is approximately, let's just call it $40. So if the expected move is $40, meaning that, all right, the earnings were due out and it was expected to move $40. What was the actual move? 122. You're basically at about a 3 sigma, or 3 times what was anticipated, which again, you start to get to, statistically significant numbers when you're looking at like a 3 deviation plus move. It's not 1 in a million, but I'll tell you right now, one of the things about Netflix, and I continually mention this, is you just don't want to sell premium in there naked. You never did. You never had to. You never wanted to. Going back almost, a full decade, there was actually a 5 sigma move inside of Netflix. I mean, that thing has been known for years as the widowmaker in this marketplace. With that being said, as I said, there's conflict all over the screen. Really, when it comes to Netflix, I think that this is kind of taking a psychological toll on traders everywhere, where, yes, there's some real activity to where people, listen, they just got blown out of positions because they were getting annihilated, in Netflix. But I think, again, it takes a bit of a psychological toll, and anything that was somewhat related to Netflix and like subscribers took big hits, including, Spotify, a few other major stocks. But even the monsters of tech, again, I don't look that much at what's on the peripheral. I just don't, because the reality is, unless it's in the $100 billion, market cap club, it just doesn't make a difference these days. Yeah, speaking of $100 billion market cap club, when you start looking at Netflix now, take a look at this. They closed literally at $100 billion. Speaking of Netflix, it's also worthy of mentioning this was a $700 stock mere months ago, turned into a $200 product. It's a phenomenal move to the downside. The year-to-date percentage loss now down 62%. But the loss from like recent highs, almost too devastating to even want to consider how hideous that was. All right, but let's get again down to business of what we can kind of expect. So one of the things that's been a little bit of a saving grace here is we are seeing some positive price action inside of Tesla. Will Elon Musk save the world here? When it comes to Tesla and the positive price action, it is creating, albeit a mild bid under the Nasdaq in the after hours. However, Tesla hasn't necessarily gone through its conference call. I don't even think it's worthy of necessarily looking at the press release specific from Tesla. What I look at is the fact that, hey, listen, it moved down $50, right? In the after hours, whatever it may be, the stock has actually fluctuated pretty considerably. It's up somewhere between $40 and $50 here in after hours, but it has as much as a $90 expected move. So I think that you could still see considerable price action. And that's why, again, it's early on. I take this kind of move with a grain of salt. And if there's considerable price action to the upside or the downside, again, it's going to rock the Nasdaq at this point in time. And as I said, Tesla rocks, but the Nasdaq drops. I mean, the only thing right now that's really going to bid back that Nasdaq, in after hours is going to be, again, some positive affirmations, if you will, from Tesla. All right, but on a larger sense, what are markets actually doing right now? So again, let me get to the conflict on the screen. When I start talking about conflict on the screen, so the monsters of tech, generally speaking, are down on the day, aside, of course, from Apple and Microsoft. All right, enough said on that front. There's not that much conflict in there. Again, it's psychological effect, of course, of Netflix being down some 35%. But what I would much rather focus on when I talk about conflict, you realize you have products right now like, the financials, which are bid higher. Now, the financials have gotten hammered as of late. And the reason I'm bringing the financials in scope is because if you take a look at the S&Ps today and you think to yourself, man, the Nasdaq got killed, how did the S&Ps actually pull out a very mild game? Financials in large part are at the forefront of that. So why am I bothered by the financials? I mean, listen, the financials, hideously oversold territory. They had 3 weeks in a row where they got smoked. I mean, literally, they had a week that they broke outside the expected move. Another week they broke outside, came back in. Last week they broke outside the expected move. It's been hideous. So they have a bid back under them. Why is that unusual? Because the bonds are rallying. And I paused there for a second. You realize the bonds rallying is taking interest rates lower. That shouldn't necessarily be a positive for the financials. Okay, so all right, you got one conflict on the screen. What other conflicts do you have? Well, you just had the Nasdaq down, okay, over 1%, which again I feel is worth discussing. But at the exact same time, the VIX down a full point. It was like that didn't happen. There's no fear. There's no loathing in this marketplace at all. There's not a lot of fear at this particular level. And if you take a look at the S&Ps, one of the reasons there's not a lot of fear, if you look at the 180-day 4-hour chart, and I'm actually gonna kind of overemphasize this and kind of zoom in a little bit. All right, where are we right now? Right in the middle, stuck in the middle with you. This is kind of the middle of what has been a fairly large volatility channel, and I'm kind of cutting off some of the absolute lows, some of the absolute highs of this, but we're kind of stuck in the middle with you. The one aspect, though, that kind of resonates with me today, we actually saw a really high correlation in the S&P 100. That is, right at the open, you had 87 to 89 products trading to the upside, and that is indicative that the marketplace is unequivocally, it's ready to move. But at the exact same time that I'm saying, all right, we're ready to move, we have a really positive advanced decline line. But the marketplace didn't have a great risk reward today. And I really want to stress this because what you're actually looking at here, and I'm going to zoom in for a second, this is the weekly expected move to the SPX. All right, so let me actually break it down for you. The expected move in the SPX this week is plus or minus $98. What have we done? Pretty much tagged it. So I think that there's diminished upside capacity. Like, can the marketplace smash to the upside of the expected move? Absolutely, unequivocally, yes. Okay, but from a probability point of view, this is kind of like a real overhead resistance. I mean, this is what's just going to drag the market right into the upper edge of that expected move. And again, the upper edge of the expected move, even if we are to kind of smash through it, let's actually come into the intraday chart. I mean, we pretty much tagged the upper edge of the expected move, which is right about 44.90. Even if we're to come up against it, there's still a high probability we're going to revert back into it. So I think that the risk reward is relatively, destabilized. That is there upside of the marketplace? Of course there is. There's always upside in the marketplace, but the downside risk it's not a happy place to be right now. Again, that's based on expected move and staying inside that 44.90 handle. That and the fact that there's still considerable price action, okay, being baked in. Like this week, we're still looking at $52 of movement that's kind of baked in between now and Friday expiration. All right. So onward and upward there. One of the things that really surprised me again is the Nasdaq down pretty considerably. Bonds rallied back up. Tech gets killed. The financials actually rally a little bit. And while this is going on, big movement in the dollar. Like this is telling me that risk is actually coming out of the market. The volatility kind of shows me, hey, risk is abating a little bit in the marketplace. You can even take a look at like VVIX. The VVIX hasn't been this low for a considerable period of time. If you are looking at VVIX, you kind of got to think to yourself like, ruh-roh, this is one of the lowest levels. This is the volatility index. It's one of the lowest levels we've seen in a considerable period of time. What gives? All right. This is where I'm going to tell you right now. Look, again, there's a lot of confusion. There's a lot of, conflicting signals in the tape. Be careful right here. As I said, I think that the risk reward is destabilized, that there's upside potential unequivocally in this marketplace, but the downside risks are considerable enough to not only make mention of them, but what I'm basically saying is keep your helmet on. Elon Musk is not necessarily going to be the savior in here, and even though Tesla is at least bid up at this point in the evening, this may not be enough to kind of save Nasdaq in the days to come. Again, lots of tech earnings are going to be due up. Predominantly, they're going to be into next week. However, there's some definite and definitive fear on that particular front. But right ahead of us, like if you're looking for trades and trade opportunities right ahead of us, I think that we get a little bit more of a bid under the bonds. Stabilize the bonds, which have been in an absolute hideous crash, if you will, to the downside. It's like the first real uptick we've seen inside of the bond market. The other aspect I would look for is that volatility. Listen, if you're going to be a buyer of volatility, I think you got to do it, and you got to do it soon. I don't think you can wait for the vol, like maybe it's going to come down to 18. Yeah, maybe it is. Or maybe it's going to spike. So volatility buyers, act now or forever hold your peace. Again, conflicting signals in the marketplace, but we are seeing higher degrees of correlation. From where I stand, okay, we're ready to rumble. That is, we're actually ready to see some broader price action in the overall market. In this case, bring up the S&Ps, the spiders, broader price action that could actually take us to extremes of the environment that we've actually been in for the last couple of months. With that, thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.